Bitcoin, blockchain, ICOs, Ethereum, and all the rest. Are cryptocurrencies the 21st century unicorn, a speculative bubble, or the future of money? The CryptoCast will help you understand the rise, the fall of digital currency, the highs, the highlights, the potential, and the lows, the scams, and pitfalls. I'm your host, Jason Hartman, and we'll talk with some of the biggest names in the space. CryptoCast is your resource for all things crypto. Let's go. Hey, it's my pleasure to welcome Mark Moss. He is a strategic financial analyst. He's a full-time investor. He has a fantastic YouTube channel. I've learned a lot from him over the time I've been following his work, and I am really happy to bring him to you today. He was one of the early people in the cryptocurrency space, so maybe we'll talk about that a little bit and some other things, namely what to expect next. Mark, welcome. How you doing, buddy?
I'm doing great. Always a pleasure to talk to you. Looking forward to it.
It's good to have you on. So, everybody wants to know, what's next, right? And you really focus on a lot of strategy. In fact, one of your handles is Strategic Mark. I love it. And asset allocation and things like that. I mean, maybe let's start off by talking about, what do you think the best strategy is for people nowadays and with all that's going on in the world?
Well, I think the best strategy for people is to recognize that nobody knows.
Yep. Good answer.
The smartest people in the world know that they don't know.
Right.
And so I think it's Porter Stansberry that says it's the things, or no, it wasn't him. Maybe it was like Mark Twain. Anyway, I have so many quotes in my head, but he said, it's the things that you know absolutely 100% for certain are the things that get you in trouble. Mm-hmm. And so we always have to kind of have strong conviction, but also be quick to pivot. So the smartest people know that they don't know. And so what that means is the best strategy is something that kind of spreads out your risk, gives you better upside by participating in some of these things, but also limits the amount of risk that you're giving yourself. So for example, I'm sure we'll get into Bitcoin. Bitcoin, I believe, is probably the most explosive asset. It's been the best performing asset for the last 11 years. I believe it's the best risk adjusted asset that we have today. And so many people are like, oh, it's way too risky. I would never buy it. And that's fine. And nobody should go 100% in. But one of the best investors in the world, Paul Tudor Jones, just said that he'd put 2% of his portfolio towards it. So it's about hey, this has a chance. And so let me put 1 or 2% towards it.
It's a small bet and it might be a big payoff. I get it. Right. Yeah. Versus, people that put, 20% plus, they're taking a big risk, right?
Right.
Yeah.
And so I think the biggest mistake that I see people make is always trying to guess what the right asset to invest into. No, don't buy Bitcoin, only buy gold. Right. No, don't buy Bitcoin. Don't buy gold. Only buy Bitcoin. Why? Why not buy both? Mm-hmm. No, only in real estate. Well, why just real estate? Why not real estate and gold and Bitcoin? Right? Why do you have to choose only one? You don't have to. And so I think that would probably be the biggest mistake that people make. The other thing, if we're just talking big overarching kind of thesis, is my biggest thesis, my investing thesis I pound the table on is always investing for cash flow. And you say, well, Mark, you were just talking about investing for Bitcoin. Bitcoin doesn't have cash flow. You're absolutely right. Part of my portfolio, of course, is for growth, but I take that growth, I take those profits from growth, and I always invest them back into cash flow. So cash flow is always the name of the game for me. I think the lie that we've been told for 40, 50 years of, go to school, get a good job, save for 40, 50 years and live off your savings is ridiculous. And we know it doesn't work because half the baby boomers today don't have any savings. So that doesn't work. So rather than live off savings, I think we live off cash flow, and it's much easier to obtain than people think.
Yeah, absolutely. I think that's very good. And I think that's what true investing is. It's investing for yield, for cash flow. Absolutely right on that. But I see your point about, taking, 2% of your net worth and putting it into a swing for the fences type of thing. You probably know Jason Calacanis, and he talks about investing in startups and so forth. And most of those are just total losers. You're going to lose your money. Just get ready. But you hit on one, and that one could have a multiple that's really extreme if it's Facebook. for example, right? And so Peter Thiel would probably concur with that kind of thing. So I agree. That's interesting. So let's talk about that allocation. Like, is there a specific percentage? I know we talked about, maybe like Tudor Jones, 2% in Bitcoin, but how do you allocate everything, like that whole pie?
I wish there was like a one size fits all. It's not. So everybody kind of has their own, what I like to call investor DNA. And so we have to figure out what's right for us. The one thing that I would say back to Paul Tudor Jones, and like you talked about the guy investing in these startup companies, most of them don't make it. One does. And so that's an important thing to pick out right there. So if you're going to invest in these risky type assets, like startup companies, for example, like a venture capitalist would, a venture capitalist is going to take their total amount they're allocating towards venture capital and then divide that between, 15 to 20 different positions. Because they know, just as you said, most are not going to make it, but a couple will hit. And so if you're just going to go for just one, your chance of success is very, very low. And so you really need to go with a plan. And so like Paul Tudor Jones or like these venture capitalists, I'm going to take 20% of my total portfolio and put it towards startups. And of that 20%, I'm going to divide that between 10 different positions in that venture capital allocation. And so that's the way that we do it. So overall, just from a super high level, we all need to find out what it is for us. And the reason why it's important to find out what it is for you is because it changes. My allocation is different today than it was a year ago. And it's way different than it was 10 years ago. And so we need to understand how that works. And so ultimately, I teach something that I call the 4-pillar blueprint. And basically what that is taking your total investable assets and breaking it down into 4 different categories, which is 1, investing for growth. And depending on how you feel, your risk tolerance, your time horizon, how much money you have, your sophistication level, et cetera, you might put anywhere from 20% up to 80% of your portfolio in growth. And then, of course, growth would be all these things like venture capital, Bitcoin, equity, stocks, et cetera. Another one of the pillars is investing for cash flow, which we just talked about. I think that should be a big piece of someone's portfolio. In the beginning, if you only have a little bit of money, maybe you're only putting 5 or 10% of your portfolio towards cash flow. But as you get more money, as your portfolio gets bigger, I try to put about 40 to 50% of my portfolio towards cash flow.
Right. So the old saying, in risk what you can afford to lose, right? Yep. So as you become more wealthy, the allocation switches where I don't know. It's sort of interesting, Mark, because some people, they say, well, when you've already kind of made it, you want to get really conservative, and diversification preserves wealth, concentration grows wealth, right? But you can also afford to lose more. It's not going to affect your lifestyle necessarily if you're wealthy and you lose, whatever you consider to be a lot of money, right? Your lifestyle won't change because of it. You'll be depressed about it and bummed out, but it won't really matter, directly. So how do you reconcile that?
Well, because it all comes back down to your own personal circumstances and mentality. So for example, before we started recording, we were talking about how I grew up racing dirt bikes, and I have a TV show where we ride dirt bikes. I do it a lot. And just the other day I crashed and I'm hurt right now. And I'm a little bit banged up, cracked rib, separated shoulder. And so the reason why I bring that up is that my risk tolerance is obviously very high. Most people my age would be like, heck no, I ain't getting on a dirt bike. I could get hurt.
Yeah, right.
And I say, yes, of course you're going to get hurt. It's not a matter of if, it's a matter of when, right? So what I mean by that is that my risk tolerance is high. And so also that carries through into my investing. I'm not afraid to lose some money because I know it's inevitable. I know I'm going to lose money, and that's okay because I'm going to make it back. Whereas some people are not okay with that.
Right.
And so it really comes down to your own personal perspective, and you and I are not the same. Nobody's the same. And even like I said, and you mentioned age is one of those things where as I get older, I need to be less risky than I was when I was younger. So on a dirt bike, I'm less risky than I was when I was younger. My investing is less risky than I was, so it changes person to person. It changes over time, and each person needs to find their own tolerance.
Okay, makes sense. Good stuff. So in terms of what's coming next, I mean, just maybe the general economic question, inflation or deflation, like that's always the, easy. Well, it's not easy, but
No, it's not easy.
it's only two choices. There are some variations like stagflation in there. And by the way, that's what I think's coming. But, what do you think, Mark? I mean, we've got all of this money creation. It's insane. We've never seen this before, I was looking at an interesting chart this morning, by the way. I wish I had it handy. Maybe I'll find it during our talk. But it was the percentage of GDP for various countries for coronavirus, what they've dedicated to battling the pandemic and the economic devastation from it and so forth. And man, it's huge. I mean, these countries are spending a huge portion of their entire productivity, their GDP, on this pandemic. Is that going to be inflationary?
So technically, yes, right? So you have to understand kind of money creation. So money's created through debt. And so as they create more money, as they create more debt, it's like a balloon. It's inflating the balloon. And just like anything, the more money they create, the less the existing money is worth. And so I try to really boil this down to something super, super basic. And people want to get all complex. And I think these economic PhDs, they get so smart, they forget the basics. And the basic is supply and demand. Mm-hmm. Everything in life comes down to supply and demand.
Good
Scarcity.
Point. Yeah.
Scarcity. Mm-hmm. That's it. So when there's more supply than there is demand, the prices drop. Nobody wants it. There's too much of it. Nobody wants it, right? But if there's more demand than supply, prices go up. And so when you think about it, when you have money inflation, it's inflating like a balloon. We're creating more money, supply, but the demand hasn't changed. And so it's just going to affect that. I guess to answer your question, what's going to happen? We're in this interesting, really the whole world changed from 1971, which is when we got off the gold standard.
Right.
And so for 5,000 years, wealth, and this kind of leads us into Bitcoin a little bit, but it's about money, right? So for 5,000 years, money and wealth was related to gold. We had a standard unit of measure. Right. So everything in the world has a standard unit of measure. We both know what an inch is. We both know what a foot is, a mile is, a gallon is, a pound is, a whatever, right? I mean, I know what a degree is. Like we all have standard units of measure. Mm-hmm. And for 5,000 years, we had a standard unit of measure for money, for wealth, value. Yep. And today we don't. In 1971, that got severed. And what happened is that allowed us to create unlimited amount of debt. So since 1971, we've created like several $100 trillion of wealth out of debt out of nowhere. Right. And the reason why it's important to understand is since 1971, 1987, 2000, 2008, et cetera, the markets keep trying to contract, meaning that debt is deleveraging. So they've leveraged up the debt, they've inflated the bubble, and it keeps trying to contract down and deflate, right? Mm-hmm. And you're asking what comes first, inflation or deflation. But the problem is every time we see deflation, they reinflate it with more debt. But the problem is the debt gets bigger, and it gets harder and harder and harder to fill that balloon back up. And so you're asking the question, do we see inflation or deflation? Well, we already know that, in the U.S., they've committed, $6 trillion to reinflating this bubble, this balloon. And to compare that to 2008, it was $700 billion, which sounds like a lot of money, but it was $700 billion in 2008. Now we're at $6 trillion. So that's how much harder it gets. Yeah. And you already just said, like all these countries, you've seen how much GDP they're putting towards this. The problem is we have all this debt, and debt disappears in an instant. Mm-hmm. So when the airlines, or let's say like the oil industry right now, the oil industry is defaulting on hundreds of billions of dollars of debt. In an instant, it's gone. It's just gone. So that's deflation. Yeah. And the Fed's trying to fight that with reinflation. Right? Does that make sense?
Yeah. Yeah. And, one of the, we can all this is like a super simplistic idea, right? But we can all understand this, relate to it, and we've certainly seen it in our own lives. Debt makes people look richer than they really are. And it makes countries look richer than they really are. Yep. So since 1971, when Nixon took us off the gold standard, there was no tether anymore. There was no more measuring stick. And the U.S., the U.S. citizens, other countries around the world, because everything became fiat, and fiat just means by authority, right? Money has value because the government says so, right? Right. And there's been this wealth effect, but a lot of it is just smoke and mirrors. It wasn't really there ever. Right. The way wealth is created is through capital formation and productivity, right? Those are the real things that actually create real wealth. Yep. But you can create fake wealth by financializing the economy and, a lot of financial instruments, financial innovation. Whenever I hear a Wall Street guy say that, I'm like, a run for the hills,
yeah.
But temporarily it will make you seem rich.
Right.
It just doesn't last forever. Yeah.
And that's exactly where we're at. So you're 100% right that wealth is created through producing goods and services. And when I produce a good and service, I get compensated with wealth. And so you're right. What we've done over the last, especially 50 years, is we've outsourced all the production, and instead we've become a financialized economy.
Yeah, and exactly. Now you're speaking of the U.S. outsourcing to Japan or to China mostly, sure. But formerly Japan. That's what you're talking about, right? And then financializing its own economy.
Right. And so just I was just kind of adding on to what you were saying, right? So we financialized the economy. So we've created hundreds of trillions of dollars of debt, which is basically fake wealth, as you're calling it, right? Where it's like this illusion of wealth. In addition, I mean, there's like over $2 quadrillion of derivatives, whatever that means.
Yeah.
Derivatives, those are bets on the financial system. And just to break it down super simple, they're bets. Again, it's gambling on the financial system. So, and it makes everybody seem richer. But the problem is, like I said, that debt can go away in the blink of an eye. With real estate, for example, is a real tangible asset. That's wealth. It's land, it's building, et cetera. And maybe that house could lose 50% of its value.
Yeah.
But it doesn't disappear.
Right.
The land is there. The house is there. But with debt, it's just gone. When it's gone, it's gone. Yeah.
Yeah. Good stuff. Okay. I found that chart I was talking about just to give you and the listeners and viewers a point of reference. I just thought I'd share this with you. So Japan has spent the most in terms of coronavirus stimulus packages, 21% of its GDP. US is number 2, 13%. Sweden, 12%, Germany, 10%, and on down from there. But Japan, 21%, and Japan, of any developed country, has more debt than anybody. Their debt to GDP ratio is like 230% or some insane number like that. It's crazy.
What's on the low end?
Well, on this chart, it doesn't do every country, but it does like the top, 10 maybe? South Korea, 2.2%.
Yeah.
So not bad.
And they've done really well with it.
Yeah, and a lot of people have really applauded South Korea's response to coronavirus, saying they did a really good job with it. So, yeah.
Yeah, and only took 2%. Amazing.
Yep, yeah.
That's a whole other subject for another conversation. But ultimately, I guess it does tie in a little bit in a sense where, as you're saying, which is absolutely right, which is all this financialized economy, this debt, it gives the illusion of wealth. What it also does is because it wasn't money that you had to earn, you treat it differently.
Right.
And you're spending other people's money. So if I worked my butt off, like I got kids, right? I'm trying to get the kids to hey, work a little bit because you'll value it more, right? When you work hard for that money, you treat it different. But when you're spending someone else's debt that money creation that came out of thin air, you're much more likely to just squander it.
Yeah. Yeah, no, that's a very good point. Very good point. When you got to earn it yourself, you're going to treat it better. And like the old saying, money always goes where it's treated best.
I love that saying. I love that saying.
Yeah, and we'll see if that happens between this huge war between California and Tesla right now.
That's interesting. So I live in California, and it's super interesting. And one of the most there's a lot of facets we could talk about, but the one most interesting facet that I found was back to your point, money goes where it's treated best, right? So Elon Musk thinks that Tesla isn't being treated right and it should move. Well, I live in California, like I said, so we've lost all the car manufacturers. They've already been gone. They're the last one left. If they leave, California stands to lose billions and billions of dollars. But Tesla could make billions of dollars from working in a cheaper state. What's interesting, though, is he says, I should move. And one of the representatives, I forget what her name is, she basically tweeted F Trump or F Tesla.
Right. Yeah. F Elon Musk. And that was like Loretta Gonzalez or something like that.
I think she's an assemblywoman for the great state of California. But look at the contrast is what I want to bring out. Yeah. So she says, F you. And Nevada and Texas say if you come here, we will roll out the red carpet. We will get you tax incentives. We will get you employees. So, I mean, are you going to stay in a place that says F you, or are you going to go to a place that rolls out the red carpet? And so just look at that, right? Like, it's just amazing.
Yeah, it's just really, California is my home state too. I lived there the vast majority of my life, and I've never seen a state try so hard to commit suicide. It's absolutely amazing. It's like they want to ruin their economy. It's just weird. But there's a lot of wealth there. There's a lot of people that came there many years ago and just won't leave that easily. It's sticky, right? It's not that easy to move. It's a hard decision. It's hard to do, so it's really interesting. Hey, talk to us a little bit about cryptocurrencies, if you will. I haven't talked about that much on the show lately, and I used to talk about it a lot. And this is something that I say to my listeners, Mark, I would love to be wrong about this. I'm not a Bitcoin bull, but I'd love to be wrong. I really would. I'd love nothing more than to see a decentralized, like democratized currency. I just think that the Fed and the government, they're just too powerful. And other central banks. And I kind of view it as that, like, the chief product of any government is literally their currency. Like the dollar is the product they produce, right? Tesla makes cars, other companies make widgets. Well, governments make currency, right? That's their product.
So a couple things I'd say about that. One, you mentioned earlier that fiat means it's like government mandated, right?
Right.
Well, fiat means it's fake money. And the thing is that people think that the government has the military and they're going to force people to use the dollar, but that's not how it works. Mm-hmm. There has to be trust. Without trust, nobody will use it. That's why in Venezuela right now, it's lined with paper dollars and nobody will even bother to pick them up.
Right.
Nobody cares. It doesn't matter how much the government mandates you to use it. If nobody wants it, nobody wants it. And that's just the end of the story. Zimbabwe, we can talk about this all day. Zimbabwe has $100 trillion banknotes. Yeah. And so when there's no trust, no one's going to use it. I don't care how big the military is. So that being said, the government has a monopoly on it because they did this sly, tricky thing where all dollars were backed by gold. In 1971, they removed that, but the dollar didn't really change. And most people don't really even understand what happened there. And that's all fine and good as long as things continue to work as they are. But at some point that may fail. But what I would also do is I would roll things back a little bit. And I would say, like, if you looked at, maybe in the 1500s, really like the Catholic Church and the government were like together as one, right? And the people weren't allowed to read the Bible. And then we got the printing press and the Bibles were mass produced, and eventually the information got spread. So the point that I want to make is information was centralized. Mm-hmm. And you had to go to the church. You had to go to the Catholic Church to get the information, and they told you what they wanted you to know. It wasn't available for you to think on your own. Mm-hmm. Once the printing press came out, it decentralized the information access to the Bible, and the Catholic Church lost the stranglehold, and eventually we got the separation of church and state.
Mm-hmm. Yeah. Things become democratized.
Today, as you're saying, there's a monopoly, centralization of money, of value. And the government holds the monopoly on that, as you're saying, and you're accurate in saying that. But things can become decentralized. And so eventually, I believe we're on a very short path to seeing a separation of money and state. And I believe we need to go. And so really, if you look at, did you have a question about that?
Well, yeah, look, at every law and every government mandate comes down to being at the wrong end of the point of a gun. That's the bottom line. If you don't pay your taxes, first you'll get some letters, then, you'll get some phone calls, then you'll get, police battering down your door and coming in and putting you in a cage, right? So that's the result of any law, right? So, I look at it like, cocaine, right? It's an illegal drug, but it has a market and a value, and people do trade in it as they trade in other illegal substances, but not many. It's never going to be a big thing. It's never going to compete with the dollar because it's illegal.
You haven't seen the cartels and the trillions of dollars they have then.
they got a lot, but compared to the GDP of the U.S. economy, it's a drop in the bucket, right? But yeah, it's a lot for Pablo Escobar, right?
Sure.
Or whatever, right?
Well, what I'd say to that, a couple things I'll say to that first is that, one, it doesn't have to be necessarily. It depends on what you consider success, and I guess it depends on what we're trying to talk about here. Meaning, first of all, like the gold market is $10 trillion, and not everybody uses gold. Most people don't even own gold.
Good point.
But yet it's $10 trillion. The offshore banking sector is about $40 trillion. Not everybody has offshore bank accounts.
Right.
That's not even the standard, but yet it's $40 trillion. So could Bitcoin capture a little bit of that offshore banking? Could it capture a little bit of the gold market? If so, it could easily get to $5-10 trillion, which puts it at a couple $100,000 per Bitcoin. And that's without.
Well, that's an interesting point. Yeah, that's an interesting point. Do you know the size that, like, the market cap of Bitcoin now that's available Bitcoins? Because there's only like 2 million left or something, right?
The market cap as of today is...
It changes radically as we know.
$163 billion.
Okay, so it's tiny.
It's tiny. So I have a video on my channel how Bitcoin gets to $100,000. And basically $100,000 per coin. And it's simple. Like, all it has to do is capture 2 or 3% of the gold market, 2 or 3% of the offshore banking sector. And like, it can be there. And like, offshore banking is not mainstream.
Yeah.
So it depends. Like, are we talking about, like, will it go from, $10,000 to $100,000, or will it become the reserve currency of the world? Those are different conversations, of course.
Right.
I believe so. As an investor, I believe it's the single best investment we have today. I think there's a very probable chance. So we think about things in probabilities. I think there's a very probable chance we could see it get to $100,000, which is from 10,000 to 100,000 is an amazing gain. Or it could lose 100. It could lose 100%. So you could lose 100%, or you have an upside of 1,000%. Those are odds I like.
And that equation is a pretty good equation. You're right. And by the way, we should tell the audience, because they don't know you yet. You're a real estate guy. Like, you love real estate investing, and you talk about it a lot. And this is something you do with a small portion of your portfolio for that possible home run swing, right?
Yeah, I mean, I also invest into gold, and I also invest into stocks and all that. So, but all of that is put together into, like I said, my growth allocation. And then when I take profits from there, I take those profits and I put them over into cash flow and into real estate. So there's a quote that I can't remember who said it, and I have so many. I think it was F.A. Hayek, who's one of the great Austrian economics of our time. And he said that there shall never be a sound money again until it is taken from the hands of the government. But it can't be done by force, but rather through a sly roundabout way that they don't know until it's too late.
Which is basically, interestingly, what they've been doing to us for years through inflation, the sly roundabout way to destroy our wealth. And
so Bitcoin fits that narrative perfectly, because it's this sly roundabout way. If the government, the Fed, whoever you want to say, would have seen what was going on 10 years ago, they would have stopped it. At this point, it's too big. It's too prevalent. So I'm not saying that all the governments of the world can't come together and make it illegal, and they'll kill you if they catch you with it. And that would definitely limit the ability. I'm not saying that won't happen. There's a chance that could happen. There is a chance, but there's also a chance that doesn't happen. Right. And when you look at it, so like Representative Brad Sherman from California, another great Californian guy, he spoke to the Senate committee and said, we need to outlaw cryptocurrency because it undermines our monopoly on money. And what it does as the U.S. is it takes away our ability to slap sanctions on countries like Iran. That's what he said. But Iran was sitting there listening going, oh, really? Well, then I think we should use it. Right. And so all of a sudden now the fact that the U.S. would want to make it illegal makes other countries want to adopt it. And what it creates game theory. And so now the U.S. I'm not saying they are, but the U.S. makes it illegal, and then all of a sudden it lives in that free part of the world. So that's one thing. The other thing that I would say is that we know that that policy is set by lobbying, right? The people lobby the government and they get their way with the government, right?
Right.
And I would say that I don't know who's bigger, but probably the two biggest lobby are pharma and finance. Right. So finance is definitely one of the biggest lobby arms in there. And we know that Goldman Sachs, Fidelity, TD Ameritrade, NYSE, Bakkt, all these companies have spent collectively billions of dollars to start building out Bitcoin products. And so they're not going to be happy to see the government change policy and make that illegal after they've already spent billions of dollars to bring those products in. I would bet they're going to spend a lot of money lobbying to keep that active so they can make that money.
How do you recommend buying Bitcoin?
How do I recommend buying it?
Yeah, I mean, on like the common exchanges, or do you recommend doing it some other way? Or
I mean, the easiest way, maybe not the most ideal way, but the easiest way is go to Coinbase.com, set up an account. I mean, they're a US based company, fully legit, fully transparent. You link up your account and you just click buy and it just buys it. Jack Dorsey from Twitter has a company called Square, and there's a company and they have what's called the Cash app. And then you can just download this Cash app on your phone, and it's kind of like a banking app. And I can request money, send money, kind of like a Venmo kind of type deal, and I can buy Bitcoin right in the Cash app.
Okay, got it. So he's selling it too. That's interesting. And tell us about the halving that just happened.
Yeah. So I want to tell you about the halving, but I want to tell you just back to, well, let's talk about the halving first. So, basically what's happened, and this is a very interesting thing, and I actually have a video dropping on my YouTube channel here in 1 minute, talking about the halving. So if anybody wants to know more, they can go watch that on the channel. But basically what happens is, it's very interesting. So the Bitcoin was created as a direct response to the 2008 great financial crash. So in the very first line of code, the programmer, Satoshi Nakamoto, whoever he is, but the programmer wrote a line in the code, and he quoted the headline of a newspaper article: "The chancellor is on the brink of a second bailout." And it was in response to this endless money printing that Bitcoin was created. And Bitcoin was created to be deflationary. So we talk about money, and there's just no end to how much they make. And of course, the more they make, the less it's worth. The dollar's lost 98% of its purchasing power over the last 100 years. Well, Bitcoin was created as a response to that, and it's made deflationary. It has a hard cap, never be more than 21 million Bitcoin ever. And what happens is, over time, they're released. So and there's a new block. You've heard blockchain. So as the transactions gets processed, it's block by block by block, and it gets added. Every 10 minutes, a new block. And every 10 minutes, a new block releases Bitcoins into the system. And if you buy a computer and you hook into the network, which is permissionless, everybody's able to do this. Anyone can hook a computer in and start helping the network with security. If you participate in that, when coins are released, you get a share of that, depending on how much share you're putting in on work. Now, in the beginning, it was 50 coins, 50 Bitcoin every block, every 10 minutes. But what happens is that schedule goes down every 4 years. It gets cut in half. So then it was 25 Bitcoins every 10 minutes. Right now, we've been 12.5 Bitcoin every 10 minutes. And as of yesterday, it became 6.25 Bitcoin every 10 minutes. And so back to what I said about supply and demand, right? Things are super simple. Right now, before yesterday, we were creating 1,800 new Bitcoin were created every single day. 1,800 Bitcoin. It's about, at today's price, roughly $16 million, right? So the market, the demand and the supply is 1,800 new Bitcoin every day. The demand is absorbing that, and the price is stable with that supply and demand. If the demand stays the same, but you cut the supply in half, what happens? The price should go up.
Right. Should. Yeah.
So that's the big deal with the halving. So we're on this supply schedule, this fixed supply schedule. Every 4 years, the inflation, you can call it the inflation of Bitcoin, gets cut in half every 4 years. And basically all the way, we have about 120 more years until it runs out and we max out the 21 million Bitcoin and there's no more.
So, Mark, I know we got to wrap it up here, but this is fascinating. And, one more thing I hear from the skeptics is they'll say, well, okay, Bitcoin is limited. You got like 21 million allowed or something like that, right? But the market for cryptocurrency in general is totally unlimited. I mean, you've got all these others out there, right? Ethereum and a zillion others. What do you say to that? Like, is it just a cryptocurrency thing, or is it all about Bitcoin?
In my mind, it's all about Bitcoin. And what I would say to that is, you have one Mona Lisa, and it's worth a lot of money. You have two paintings right behind you. Do those two paintings diminish the value of the Mona Lisa?
No, they don't.
They don't. There's thousands of paintings. There's millions of paintings in the world.
Right. Sure.
Do those millions of paintings diminish the value of the Mona Lisa?
Yeah.
No,
right.
They don't. And the reason why is because Mona Lisa has characteristics that are unique to the Mona Lisa. And Bitcoin has characteristics that are unique to Bitcoin that no one else has. No one else can do. No one else, no other coin, no other cryptocurrency could ever replicate or duplicate. Well, I don't want to say ever, but have not so far been able to, and I would almost say never, probably never could ever duplicate what Bitcoin has. And so what does Bitcoin have? It has immutability, it has scarcity, and it has censorship resistant. And this is the big thing, right? So you've seen in Weimar Republic, you've seen in Cyprus in 2015, Australia has bail-in laws. The government goes broke, they just take your money. They seize gold. The U.S. seized gold in 1933, right? So the government just takes your money when they want it. Bitcoin is censorship resistant. Nobody can seize it, steal it. Nobody can manipulate it, prevent it. We saw like in WikiLeaks, we saw Julian Assange was holed up and people were sending him money. And then the government just said, nope, you can't send him money anymore. So people started sending him Bitcoin. And so Bitcoin is freedom. Bitcoin is sovereignty. If I hold Bitcoin, nobody can steal it. Nobody can seize it. Nobody can manipulate it. Nobody can inflate it away. Like those dollars in your bank account, the government's inflating them away, or they could take them out of your bank if they wanted. Either way, right? But nobody can seize it. And in addition, if I want to pay you for something with dollars through PayPal, Venmo, wire transfer, there's 50 people in line that could stop that transaction. But Bitcoin is peer to peer. If I want to pay you, nobody can stop it, block it, or prevent it. It's freedom. It's sovereignty. And I believe that freedom and sovereignty will always win.
Yeah, and that's a really good libertarian view. I like it. I guess the only way they could stop it is they could somehow block the packets on the internet. Like, they can block voice packets, right? Because they're different than other bits and bytes. I don't know. That's above my pay grade, but
theoretically, but technically no, right? So people are already doing Bitcoin transactions over ham radios. They're doing them through. There's a new thing called mesh networks, and so it's getting really, really big. Where it's like there's a new sector called dissident tech, and so as governments become more tyrannical, we're seeing dissident, for example. That we see it in New York as well, but there's called mesh networks, and basically they're little mini. You know what that is? Like mini antenna. They use multiple radio waves. They'll use your Bluetooth, your Wi-Fi, and the cellular. Bluetooth.
Yeah, right.
Exactly. So they're transferring Bitcoin on mesh networks. They're transferring Bitcoin on ham radios. And so they have satellites up. So there's satellites up. If the ISP takes the internet down, you have the satellites up. So you're right. I mean, there could be this cat and mouse. There's all these what ifs, right? And they're all and we have to recognize those. We don't want to ignore them, but we want to assign them probabilities. Is that probable that and I hear it all the time on my channel. What if the whole internet goes down? And I'm like, if you think there's a world with no internet, like
I know
we have bigger problems. So I mean, is that probable? I guess, but I give it such a small percentage of right? So you have to look at all these things, and I will give you though that money is power, and the Fed, the central banks, whoever you want to call it, control the world with the money, and they do not want to lose control of that, and they will throw every tool in their arsenal at this. Right. And so it's going to be a battle, and I'll give you that.
Yeah, and I think they'll come along with their own cryptocurrency, their own digital dollar, at some point. That's going to happen but the problem is when that happens, there will be zero financial privacy. I mean, they will know our every move. I mean, one of the, ultimate forms of freedom is the ability to trade without Big Brother watching you, to buy what you want. Can you imagine in a really ugly dystopian 1984-ish world where, every time you make a purchase on the internet or something, the government questions, well, what was that for? It's like posting something on Facebook that they consider questionable, and they'll hide it or ghost it, or they don't agree with the politics. I mean, it's absolutely scary. Yeah.
It's even worse. So like those government cryptocurrencies, that it's programmable money. So they can program it. So, for example, if you're receiving government assistance, for example, when they transfer that money, they can program that money where you can only spend it on these certain things. Right. It can't be on these things. If you don't spend it within a certain time, it automatically comes back to them. So like it can be programmed any way they want before they even give it to you.
Yeah. And that will create all sorts of black markets.
But what I would just say is the overarching theme is what I started with, is it always has to come down to trust. And so no government force, and they threaten you with the barrel of a gun. I understand that, but no amount of force can make you use something when humans don't want to trade for it. So when in Venezuela, they go to buy that bread with those dollars and they say, I don't want those dollars, but I will take water. I'll take batteries.
Yeah,
I'll take fruit, right? I don't want those Venezuelan dollars. And so at the end of the day, there's always going to be free will. There's always going to be free trade, and no amount of force can affect that, I don't think.
Yeah. Yeah. Well, very good, because, I remember when I was in Romania, our guide was a high level person under the, Ceausescu communist regime, right? And she was a media reporter. And so she got to live a much nicer life than other people did. But of course, she had to toe the state line, which was completely bogus. And she talked about how they would ration everything. And maybe 1 or 2 times a year, the country would get, you ready for this? Chocolate. And the whole country would be like in heaven. They'd be stoned on chocolate because they got chocolate, right? And, she said that they would dole out shoes. There would be a certain time when the government would announce that, hey, we've got shoes and you can go get shoes based on, whatever your name is, or I don't know how they did it. But people would wait in line to get a pair of shoes, Mark, for, 24, 36 hours, and they'd get their place and they'd go into the place to get their free communist shoes, and they wouldn't have their size. And I said, well, what did you do? Well, we had to develop our own market and trade them behind the scenes because we had to get what fit properly, right? And that's exactly what you're saying. People always develop their own gray or black markets for everything. So that's true. Capitalism is a very natural thing, isn't it?
It is. Yeah.
Yeah, it's good. Hey, give out your website. This has been great talking to you. Give out your website. Tell people where they can find out more.
Yeah, for sure. I mean, I put out content a couple times a week on YouTube. Just search Mark Moss. You'll find it there. Like I said, I just dropped a video as it released right now on this whole Bitcoin halving. So if you want to know more about that, I have a whole video about that. I talk about all these different topics that we've kind of covered on this show. So if you like any of those topics, making money, investing money, and having success in life, then check out the channel. It's the best place to see me.
We love it. Hey, Mark, thanks a lot for joining us.
Yep. Thank you so much.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.